let's go live to Dublin to find out what the downgrade means. We've got Sebastian Orsi, an equity analyst from Merrion Capital, joining us now. Sebastian, thanks for joining us this morning. Often these downgrades are considered to be lagging indicators. Is this a big deal, or was it widely anticipated?
I think it's pretty well anticipated at this point in time. A lot of the criteria that Moody's has given this morning would have been widely anticipated in terms of debt to GDP measures, the crystallization of contingent liabilities for the banking sector, as well as the outlook for economic growth. But I don't think anything they've cited will come as a surprise to anyone.
Now, they are talking about that debt to GDP ratio. Just how bad is it? So the debt is rising despite all those austerity measures, isn't it?
Yes, certainly there's still a significant budget deficit, so the debt position is continuing to increase. They're looking for it to stabilize in the range of 95 to 100% of GDP over a 2 to 3 year horizon.
And just how difficult is it for the banks to receive credit? The ECB has been quite heavily involved in Irish banks, hasn't it?
Yeah, the Irish banking system has significant liquidity pools available to it, but certainly the European or bank funding markets have been closed generally to all but the highest rated banks out there. So the Irish banks, amongst the periphery of European banks, are going to find it more difficult to access funding, particularly on the term debt side. But in the short term, they certainly have access to ECB facilities still available to them.
And in terms of growth prospects for Ireland, that's one of the things that Moody's mentioned specifically, that the growth prospects are fairly weak. And yet with a low euro, Ireland's done quite well with exports recently, hasn't it?
Yeah, the export sector certainly has contributed to the economy over the last little while. It's more the domestic demand situation that has collapsed, particularly on account of the housing market and the feed through to the banking system. The exports have continued to grow, and the outlook has improved, but still we're contingent on the outlook for the balance of growth around the world.
And the banking sector obviously is one of the areas that's been hit. The property market is also taking a bit of a pounding in Ireland. Is there any blue sky on that, or is it still in a lot of trouble?
Well, we've seen significant price falls already. The banking system is having the NAMA, the National Asset Management Agency, is up and running at this point in time. The banks are transferring their commercial property loans to NAMA. At that point, we might see some more activity within the property sector. The underlying economy will really be the thing to watch there in terms of office take-up and demand for retail space. So as we start to see the overall economy start to improve, perhaps the property market will pick up on the back of that. But it's still tentative and early days yet.
NAMA was a bit of an experiment on the part of the Irish government. How well has it been doing? I mean, and is it something that is going to carry on indefinitely?
Well, no, there is a finite lifespan anticipated for NAMA of about 10 years. It's early days yet. They've only transferred the first tranche of loans, and the second tranche is still in progress. So, the discounts on the first loans have been about 50%, much higher than initially anticipated, and perhaps the credit quality across the spectrum has been lower than anticipated initially. But it's early days yet, so I don't think NAMA's in the process of actually working out its loans yet. It's just getting the assets under its management in the first place.
Sebastian Orsi, thank you very much indeed for joining us.